I'm gonna do right now is I'm gonna transition this call to a gentleman that I have a tremendous amount of respect for. This gentleman has a PhD in finance and economics. We're talking about somebody who's a consultant, CFO, educator, someone who has been doing this for the majority of his life. And this is why we call him the finance doctor, because he's about to give you the why behind the what. So it brings me pleasure to turn this call over to none other than the one, the only finance doctor, Dr. Craig Bythewood. Dr. B, you on the line?
Yes, I am on the line, BYOBers. Thank you, Ms. Dyer, for a wonderful training. I need to let everyone know up front that I will be off camera for this session because I am on daddy duty. My two younger children were scheduled to attend a concert tonight that daddy thought was on Friday. So I'm in the parking lot being the best dad of the year. Now, they should be going to see New Type of Money, but instead they're going to see Lil Baby and Lil Durk. Yes, my children are ghetto. So welcome to a talk with the finance doctor, your RX for Forex. I'm hoping that I will be able to keep the background noise to a minimum. I found the most quietest spot I could because these conversations are important and we need to always keep our momentum up because what we're doing right now is changing lives. What we're doing right now is creating generational wealth. So it is so important that we put ourselves in a position where every time we have an opportunity to discuss wealth, abundance, and understanding, we take advantage of it. So in honor of Lil Baby and Lil Durk, it's a talk with the Lil Finance Doctor. So what I'd like to do is take a couple of things that Ms. Dyer said and give my take on them. First, I want to talk about her commentary on shortcuts because I think that that is very, very important. We talk about affirmations all the time. So let me give you guys a little peek behind the curtain. There's a trick that we life coaches use with affirmations, and it's called a lofty question. What does that mean? Well, sometimes when you do an affirmation, your conscious mind will say, oh man, that's crap. That ain't true. You ain't did that. You ain't never did that. You ain't come from nothing. So when you have a situation like that, where you're aware of the fact that your affirmation is being hated on by yourself, you respond with what is called a lofty question, because you will question a statement, but you won't question a question. So for example, if I say I am a master trader, I would say something like this. Why am I a master trader and all my trades end in profit? Because when I say it like that, then I don't get any friction or resistance from my conscious mind. So I said all that just to say this. One of my affirmations is, or one of my lofty questions is, why do I get so much done in so little time? And because I say that every single day, it's the reality. It's what happens. I have extra time. So I said all that to say this. Some of you have convinced yourself that you don't have time. I don't have time. I don't have time. I don't have time. I don't know how many times I've exposed this business to someone, and after they say 3 or 4 good things about it, the 5th statement is, I don't have time. Well, in reality, when you take shortcuts, it takes longer. When you take shortcuts, you literally make the process longer. And I'll give you a perfect example snatched from the headlines of my laptop. So my entire adult life, I've kept every single one of my files on a computer inside of a folder called Dr. B. So what I do is I put the shortcut Dr. B on my desktop. So every time I look at my computer, I see Dr. B. It's right there. I see it as soon as I turn the computer on. I can get directly into the folder. But if I take my mouse, if I take my cursor and I put it around or hover around the folder, guess what? It shows the entire path. It shows exactly what Dr. B is under, and then what that is under, and then what that is under. So it shows all the subdirectories. Watch this. So I may have the illusion that it's a shortcut, but it's not really a shortcut. I still have to go through all the proper path, all the proper processes in order to get there. That's the way you need to look at your trading. Go through the proper path, go through the processes, because when you go through the processes, you'll look up and it'll take less time. You'll be doing more and less because you took the time to do it in the proper steps. So shortcuts are not the move at all, especially in this game. Something else you talked about that I want to comment on is the concept of it being personal. It really is. You know, back in the day, you would go to the movies and they would have those ads. They have 20 minutes worth of ads. And one of the ads would always be about a new movie where somebody's family was getting killed, and then they would go and get revenge on everybody that killed the family. And they would always say the same thing in the ad. This time it's personal. Exactly. This time is personal. So you need to understand that there are only right answers in trading. There are only right answers. You do it the way you feel comfortable with. Because if you try to do something because Ms. Dyer does it, or you do something because Ms. Anderson does it, or you do something because Mr. Rogers does it, that's not comfort. That's not you. You remember I mentioned last week, on Tuesday, excuse me, that one of our BYOBers said to me, I'm not Mr. Rogers. I'm not Ms. Dyer. I'm not you. Yes, you are. We are all the same. We're all humans going from not counting pips to where we are, going to me having to relearn the entire understanding because what I was doing on a global scale is totally different than what we're doing on an individual scale. So allow yourself to make it personal. What you do and how you do it is right. Now, let me transition that into this. How do you know that what you're doing is correct? How do you know that the personal part of you is being reflected in your trading style? Miss Dyer called it tension. I call it tight shoulders. When your shoulders are relaxed, when there is a lack of tension, that's when you know you're doing the right thing. Since we started this call off by all of you commenting on how ghetto my children are, let's take a situation from the streets. They say in them streets, scared money don't make money. Scared money don't make money. Oh, come on. I'm not the only one that's ever heard that. Scared money don't make money. So it's so important that you pick a style that you're comfortable with, because that will allow your shoulders to be relaxed, for you to operate in your own personal style, and that makes the trading game so much smoother for you. Okay, so was that sound signifying that someone had a question? Okay, I jumped right in on a talk with the finance doctor, and I want to say for those of you that are new, that this is the only call that we have that is not chart-based. So anytime you have a question, a comment, or a testimony, please unmute your mic and ask your question, especially now because I'm in a parking lot and wouldn't see the chat that well anyway. I'm literally on a cell phone. So what I want to talk about today, well, first of all, let me say this. Are there any questions, comments, or testimonies on what I've discussed or anything up to this point? Excellent. Now, what I'd like to talk about tonight are 2 3-letter acronyms. 2 3-letter acronyms. First, CPI. Second, PPI. We've been talking about those a lot in our trading game to boost our trading acumen. But our nation has been talking about them a lot as well. So I want you to really understand what these variables are and why they are important. So CPI stands for Consumer Price Index. PPI stands for Producer Price Index. Now let's break it all the way down. What is an index? Now, you know, you can be in the BYOB movement and you can trade US 30 and you can trade NAS 100, you can trade S&P 500, but never really know what an index is. I give the example all the time that we can pick up our smartphones and utilize all types of apps without knowing how the app is created or knowing exactly what the app is doing. So let's pause for a second and ask ourselves, what is an index? An index is any measurement of a particular item. I will give you an example of a perfect index that you all are familiar with. GPA, grade point average. So I'll go ahead and bring it back to the concert. So my senior is 17, my junior is 16. So if I want to say something to them about wanting to go to the Lil Baby Lil Durk concert, it's going to be rather challenging to me because my baby girl has a 4.8 GPA and my senior has a 6.2 GPA. So how can I possibly say, no, you didn't wash the dishes, so you're not going to the concert? So the way I look at it is, if you take care of business, if you do what you're supposed to do at home, then I'm going to bust my butt to try to make sure that you get all of the benefits. So I said all that to say this: GPA, grade point average, that is an index. It is a measurement that is used to mathematically compute something. So how can they have more than a 4.0? Well, they both do dual enrollment. They both take advanced placement classes. And those classes give you an increment above the actual grade. So that's why it can be higher. So whether you understand that, don't understand it, care, don't care, I'm only making the point that it is an index. And of course, US 30 and NAS 100 are also indexes that have their own way of computation. And by the way, neither computation is known, because the fact that it is a secret computation, that's what allows periodicals to pay for US 30, to pay for NASDAQ. So if everybody knew they could just do their own measurement, they wouldn't need it. So I said all that to say this: an index is simply a mechanism to calculate a particular measurement. So what we're doing with both of these indexes, CPI, PPI, is we are going to calculate prices. We're going to calculate prices. Now, let me tell you how they do it. For CPI, they take what they refer to as a basket of goods. What does that mean? That means they're going to take $100 of what they what they consider to be the average type of basket of products that someone will buy in a given month. So you may have grocery items on there. You may have, just items that a family is going to pay for. So they take that and they use that as the base. They use that as the starting point. For example, if you get an A, it's 4. If you get an F, it's 0. So those are the starting points for the calculation. So they take this basket of goods and they started it in the 1970s. So that basket of goods started as a calculation in that base year. Then they take what those same prices are of those goods are right now, and they compare it to what it was in the previous session. For example, don't you have a GPA for the semester, but then you also have a cumulative GPA? So they're calculating how much you scored right now, but I'm adding it to what you had in the past. So they're taking what that basket of goods cost last year, or let's be complete, last period, because I could do it per month, I could do it per quarter, I could do it per year, but they're looking at what that basket of goods was worth last period, and they're looking at it. So for example, the CPI yesterday was approximately 5.9%. And I'm going off the top of my head, so if I'm a little bit off, it's okay. So it's 5.9%. And they predicted a certain amount of what it was going to be. I believe they predicted 5.8. So 5.9 is higher than 5.8. So that said to the market, ooh, we're not happy about that, because we expected the rate of inflation. Let's talk about that for a second. So I went to my cousin's house tonight, who just recently buried her grandmother, but she also had a birthday. So when I went over to the house, there were cupcakes all over the house, and there were balloons, and the balloons began to lose some of their luster. So I commented on the balloons, and she said, boy, that's what she called me. Boy, let me tell you, it took me so long to blow up those balloons. So the balloons had a certain level at a certain point, but then they were inflated. She took her air and used it to inflate the balloons. That's what's happening to the prices of these baskets of goods. They're inflated. They're higher than they were before. So if we make it mathematical, that's saying this particular period, that basket of goods that consumers purchase is going to be 5.9% higher than it was before. And again, the fact that 5.9 was higher than the projection, that's the reason why the market responded. Now, let me pause for a second and say this. It is very valuable for us to understand what these measurements are and how they affect our trading. But let me be clear, it is not necessary or even wise for you to predict how it's going to impact the market. What you want to do instead is just see how it's impacting the market and then trade accordingly. I've seen so many types of situations where people think that learning it means they have to predict it. I am an economist. My PhD is in economics. I don't predict. And the perfect example of that is sports. I'm sitting here near the place where the Tampa Bay Buccaneers had their parade. Well, the Super Bowl night, all the NFL prognosticators got on TV to predict who was going to win. Every single analyst picked the Kansas City Chiefs to win, but the Tampa Bay Buccaneers won. So there really is no value in predicting. That's just what those shows do. So my point is, you don't look at that CPI or any other rate on your FX Street or Forex Factory and predict what's going to happen. You just instead understand there's going to be an impact. Because here's the deal. You may think that you have in your mind that, yes, this is what's going to happen. It's going to go up, it's going to go down, or this will affect it this way. But there are always other fundamentals that could affect what happens. Plus, each one of these currency pairs represents two currencies. So you're not just saying, how does this affect that currency? You're saying, how is this a currency impacted relative to the other currency? So you never know. I'll give you an example. Let's say you're looking at that odd USD we talked about. And so you predict how the inflation rate is going to affect USD. But what if in Australia, there are a great large number of products that they just purchased in American dollars? What if there are a bunch of products that they just sold in American dollars, and now the amount of money they're going to receive is impacted by a declining dollar? So you never know how it's going to be impacted. So the point here is to understand it, not to predict it. So CPI says Consumer Price Index. How do I determine the rate at which the things that we're going to buy is going to go up? Now, everybody under the sound of my voice right now should be seeing it in real time. You don't really need the CPI to know what you experience in life. I told the joke a few weeks ago about the fact that there's a particular piece of candy that I sometimes buy when I have to grade paper. It's not my favorite thing to do. And so it costs $0.25. So I literally walked into my corner store, my neighborhood store, with my quarters to pay for the candy, and it cost 40 cents. So it went from 25 cents to 40 cents. And I know you all have seen situations like that. So let's pause for a second and macroeconomically break that down. So the global pandemic created a very drastic decline in our markets. So if you have a drastic decline, a steep incline, I am in Tampa, Florida. I'm not too far away from Busch Gardens. Busch Gardens is known for having huge roller coasters. What makes a roller coaster good? A steep decline. A steep decline. That's what happened to our markets. Our markets had a steep decline. Now, when you have a steep decline and you start to recover, what happens is the recovery goes faster, or the demand of the recovery goes faster than the actual supply. And that leads to an increase in price. I will give you an example snatched from the headlines of my life. So when my youngest daughter orchestrated the deal to go to this concert, her argument to me was, Dad, it's only $15. Do you believe I can see these two artists for only $15? So that's what she told me. But then 2 weeks later, she sent me a text saying, Dad, the ticket prices are rising. Why are the ticket prices rising? Because there is a fixed number of seats in that particular facility. And as more people decide that they want to go, as more people decide that they want to go to the, I'm sorry, y'all, as more people decide that they want to go to this concert, the demand increases. Watch this. If the demand increases faster than the rate of the supply, what happens to the price? It goes up. So that's what happened with the ticket prices, because supply wasn't going to change. They weren't going to go to a bigger venue, but there's more demand. You know how we are. As it gets closer to the concert, more people want to go. So higher demand, supply stays the same, the price goes up. That's what's happening. Think about it. Think about how many companies right now are producing less than they were before. Think about how many companies have cut locations. Think about how many companies are cutting their hours because they have fewer employees. So the supply of items is either staying the same or declining. But as we recover, the demand is going up. So as a result of that, we're watching the economy do the same exact thing that my baby's ticket prices did. There's an increase in demand that's faster than the increase in supply, or a fixed or declining supply, prices go up. And that's one of the reasons why prices are going up so drastically and so aggressively, because of this. So some of you prior to 10 p.m. Eastern Standard Time thought you didn't understand CPI, but you do, because everybody connected with that ticket price because you've seen it happen before. When there's more demand for something and supply does not keep pace with it, the prices will go up. That is what we're watching. Now, I want you to think about this. To really break this down, let's talk about what is called an income statement or a profit and loss. One of the biggest lies that we tell ourselves in business is that accounting is hard. Is the class hard? Yes, yes. But I've been sitting in rooms with accounting professors and I know why it's hard. But the concept is very easy. That's a perfect example of what happens when we tighten our shoulders up. Everybody has an opinion that accounting is hard. Therefore, you walk in there scared, and therefore you have that experience. But accounting is so easy. Let me prove it to you. When you're looking at an income statement or a profit and loss, you're only looking at 4 things. The first thing you're looking at is money coming in. How easy is that? I'm 25% done. Whatever we're doing, whatever we're selling, whatever service we're providing, we're going to make money off of it. That's our revenue or our sales or our earnings, money coming in. Then the second thing is expenses. That's how much I'm going to spend. Don't they say it takes money to make money? You've got to buy whatever it is you're going to buy. So that's the second thing. I'm halfway done. After you get the money coming in, first thing, and then you look at the money going out, expenses, expenditures, costs, then you're going to simply pay your interest. Why would I have to pay interest? Well, anytime you borrow money, it's tax deductible. So companies always pay their interest first before they pay their taxes. And there's the fourth thing, pay your taxes. That's it. You just got a 2.5-minute version of a master's level accounting class. Money coming in, money going out, pay your interest, pay your taxes, you're done. What's left is called net income or net profit. Now, I said all of that just to focus on the second item. The second item, what did I call it? I used all these fancy words. I said expenditures, expenses, cost, outflows, money going out. It's simply what a company is going to spend in order to do whatever it is they're doing. And when companies ask the question, how much did we spend? They do it over a particular period of time. Maybe it's a quarter. Maybe it's a year. Maybe it's a month. So whatever period we agree on, we're simply asking the question, how much are we spending? Now, I started this conversation off by saying, we look at a basket of goods that the average individual is going to buy. And when we look at that, we look at those goods, we're simply going to look at how the prices are going to fluctuate over a period of time. But for a company, we're looking at that second item. That second item is saying to us, this is how much we're going to spend. Now think about it. If a company has to spend more to get the supplies or the items or the raw materials it needs to function, that's going to have an impact. It's going to impact what's left over to pay for employees. It's going to impact what's left over for them to plow their profits back into the business. It's going to have an impact. Producer price index. Producer price index is just a fancy way of saying, what's the number two? Let me do it again. Number one, money coming in. Number two, money going out. Number three, pay your interest. Number four, pay your taxes. Number two is the line on an accounting statement, on a profit and loss, on an income statement that reflects how much is being paid by a company. So today, when we looked at the PPI, we were looking at on a percentage basis, how much did the amount of money that companies have to pay for their stuff, how much did that go up or how much did that go down? Producer price index. This has been a Talk with the Finance Doctor. Questions, comments, testimonies. This will be a good time to ask some deeper questions on CPI and PPI. And by the way, I don't think I said this, but CPI and PPI are measurements of inflation. Inflation is like grades is the noun, but GPA is how you reflect grades. Inflation is the noun, CPI and PPI is how you reflect it. Questions, comments, testimonies.
Dr. Bythewood, I just like to say that all the while you were talking, giving this wonderful lesson, the thing that came to my mind is the fact that wisdom is the principal thing. But with all thy getting, get an understanding. And I am so grateful for how you have opened up our understanding, things that we've heard and listened to for such a long time. Now we actually understand what we're hearing and how to relate to it. Thank you so, so much for everything you do.
You are very welcome, Mrs. Reed. Any other questions, comments, or testimonies? Okay, I feel the need to just tell this because I have to get this off my chest. I'm sitting at a spot where individuals are walking back and forth. The concert is near a walking area. And when people, I'm sorry, when people walk up, they hear me talking, they see me, you know, in full talking mode. I do my finger to them to say, you know, very nicely, I'm smiling, like, can you hush? And literally every single person I did that to talked louder after I did that. What a beautiful, wonderful world we live in. I love life. I love this planet. So questions, comments, testimonies. I just had to get it off my chest. You know, y'all are my therapy sometimes. One more time before we close this call and this wonderful week. Questions, comments, testimonies. Okay, I really appreciate everyone being understanding about today's situation. I expect you all to get off this phone and listen to 3 songs. First, New Type of Money, then Lil Durk, and then Lil Baby. I'm joking. So This has been a talk with the finance doctor. Since I'm on dad duty, I'm telling corny dad jokes. And I would like everyone to have a wonderful Thursday evening. And we're going to close this call in prayer. Heavenly Father, thank you for this conversation. Thank you for this movement. Thank you for the flexibility. Thank you for allowing us to be who we are, to trade our own way, to have relaxed shoulders, and to understand that this is a process that we all have the ability and the power to master. We are thankful, we are appreciative, and we are grateful. Amen. Okay, everyone, have a great weekend. We'll see you at 5 a.m. on Monday. And please, this will officially end this call.